Namaste friends and welcome to this channel. Today's video is very different. We are not going to talk about which stock to buy. We are not going to talk about charts or candlestick patterns. Two people invest in the same stock at the same time. One person makes profit, the other person makes a loss. What is the difference? And welcomes. The difference is their mindset, their thinking. Think about this. Two people invent how to invest. And because of that, many of us make everyone is excited, we sell is panicking. Today, I am going to give you the exact psychological mindset that separates a successful investor from an unsuccessful one. Where the end? Because the last part has SIPs has for your future.
Want to know the real secret to building wealth? It is all about long-term thinking. Remember, wealth is built in years, not days. Not days. To build real wealth, you need a lot of patience. Just remember that Rome was not built in a day. Consistent investing creates fortune. True financial freedom doesn't come from one big trade. It comes from small investments growing steadily over time. Consistency is the key to your success. Think of investing like planting a seed. It needs regular care, knowledge, and time. Be patient and watch your wealth grow. But don't make the mistake of checking it every day. Constantly pulling it up to check the roots will only harm its growth. Patience is the key to long-term success.
Take Wipro's example. If someone invested just 10,000 in Wipro in 1980 and never sold it, never panicked, never checked worth hundreds of crores today, that is the power of long-term thinking. In India, investors like Rakesh Jhunjhunwala held Titan Company for over 20 years. He did not sell when it dipped. He trusted the long-term vision and it made him a billionaire. In India, so start your investment journey today. Remember to think long-term. Always stay invested and you will surely build wealth. Mindset number 2 is emotional discipline. Your biggest enemy is inside you. You must control your greed and fear. That is the real secret. When the market starts to rise sharply, excitement takes over and everyone rushes to invest. But this is exactly when you lead to high-risk decisions. Stay calm and stick to your long-term plan. But what happens starts to rise sharply, a panic sets in. Investors often let fear take over and they begin selling their shares rapidly just to avoid further. This is a classic emotional reaction. Investors are often torn between fear and greed. Fear makes them sell at a loss, while greed makes them buy when prices are high. Both emotions can destroy your wealth creation. So, learn to control them. When panic hits, retail investors sell. They offload shares at heavy discounts, but professionals calmly buy those stocks. Wealth transfers from the panic to the disciplined. That's how they profit from fear and greed. During the 2008 financial crisis, the stock market fell nearly 60%. Panicked investors sold everything. But by 2010, the market recovered strongly. Disciplined investors won. Here is some practical advice. Wait 48 hours before deciding. Let your emotions settle. When you feel fear or excitement, just wait. Discipline leads to wealth. Now let us discuss mindset number 3. There is a famous Hindi proverb, "Sabr ka phal meetha hota hai." It means the fruit of patience is sweet. In investing is a powerful skill. Patience is not just a virtue, it is a powerful investment strategy. While some panic and check prices constantly, patient investors gain a competitive advantage. This discipline leads to long-term wealth. Now, let's understand the magic of compounding. This is where your money begins to grow. First, your money earns returns. Then, those returns earn more returns, and that's how true wealth is built. Compounding works just like a snowball. It starts small, but as it rolls, it collects more and more snow, and it grows rapidly over time. That is the power of compounding. Compound interest is truly powerful. It is called the 8th wonder of the world. It helps your money and it grows rapidly over time. That is the power of compounding. Let us look at an SIP example. Investing 5,000 money for 20 years can grow to 50 lakh, helps your money in 25 years, 30 years, over 1 point compounding. To build real wealth, remember this formula. It requires patience, time, and consistency. That is how you grow your money tree. This is the real path to financial freedom. Start your investment journey today. To build real wealth, let's explore mindset number 4. This is contrarian thinking. You must learn to think differently. Profit when others panic. When everyone is running in panic, the smart investor walks in the opposite direction. They don't let fear guide them. So don't follow the crowd. Think for yourself. A falling market can be scary, but while others panic, quality companies stay strong. They don't let lower prices. So market fear often creates great buying opportunities.
When the market rapidly rises, greed takes over. Everyone rushes in, ignoring the warning signs. But dynamic excitement creates extreme danger. Markets fluctuate between fear and greed.
This constant emotional roller coaster drives most people to make costly mistakes. This creates perfect opportunities for disciplined and market crashes are part of the journey. The 2008 financial crisis was a massive global shock. In March 2020, COVID-19 caused another sharp crash. Markets eventually recover. Market crashed, you must prepare practical advice. Keep a watch list of quality stocks, ready. Market crashed, you must prepare practical. Be fearful when others are greedy. Be greedy when others are fearful. This is how you achieve long-term goals. Market crashed, you must prepare practical. Be can predict the market perfectly. Nobody predict perfectly. You must learn to accept what you cannot control. Markets are inherently uncertain. Financial experts often make different predictions. Even experienced investors cannot predict the market perfectly. Waiting for absolute certainty can be costly. While this investor waits for the perfect time, months and years rapidly pass him by. True certainty never arrives in the market. Let us focus on successful investing habits. This includes research and diversification. Also, regular SIP ups and downs. So, prepare, diversify, and stay consistent. Investing is actually a lot like farming. You plant seeds and look after them. Crops do not grow overnight. You have to be patient and consistent. Do not worry about daily changes. Growing your crops takes patience. Consistency leads to great results. Investing is very similar. Long-term consistency leads to results over time. Consistency brings success. Now let us discuss practical advice. Diversify your portfolio into equity, gold, and debt. Do not put everything into one stock. A diversified portfolio is always better. Accept uncertainty. Now let us see how to grow your investment. You cannot control the weather outside. Sometimes it might rain and thunder. Winds might blow hard, but resilience brings strength. Control your actions. So focus on your actions.
Welcome to the 6th mindset for success. You really need to stop listening to WhatsApp tips. Have you ever received random stock tips? They usually start with a friend's recommendation. Then relatives, investors rush to buy without any research. But buying shares without research is dangerous. Always investigate before you invest. Let's introduce rational thinking. On one side, investors follow emotions. On the other side, they analyze reports. Focus on data, research, and fundamentals. Base your decisions on facts. This is a classic example of herd mentality. People follow others without understanding why. Social pressure makes you feel like you're missing out. You must pause and think for yourself. This is a classic example of herd mentality. What is the company's business? Second, is it making a profit? And third, is the stock price fair? Beware of the pump and dump scheme. Promoters artificially drive the price up. They quietly sell at the peak. Then the stock crashes, leaving you with losses. Never blindly follow unverified tips. Beware is some practical advice for you. Smart investors study company annual reports. Always make sure to research first. Never blindly first. Let's move to mindset number 7. You must have a growth mindset and never stop learning. Investing is a lifelong journey. The investing landscape constantly evolves. New companies and technology sectors emerge. Tax laws and regulations frequently change, and global events constantly affect the markets. Let's discuss financial literacy in India. Our schools teach traditional subjects but often ignore investing. Families mostly discuss savings through deposits and gold, many more opportunities. Welcome to your investment roadmap. These include equity stocks, mutual funds, and index funds, as well as REITs, international stocks, and gold. These tools can improve your financial outcomes. Think about successful investors. They carefully read through annual reports and visit factories while taking notes. Success requires years of learning. To become a better investor, you must build a reading habit. Books are your best mentors. Try to complete at least one book every month. Start today. Master these 7 mindsets to achieve success. Long-term thinking, discipline, and patience are key. Connect them all on your investing journey. This is your path to financial freedom. Following a proven formula leads you to wealth. Small investments grow into great fortunes over time. Time in the market beats timing the market. Thank you for watching and keep growing. That is it for today. Make sure to like and subscribe for more. See you in the next video. Time in the market beats timing the market.